saw this posting by the Financial Times, and I thought to myself, everybody keeps saying, when rates calm down, and going back to what was a few years ago. But a post like this makes me think, what about the 1980s? What about when rates really went up, right? What kind of a position would that put the economy in, right? If the Fed rate continues to go up, what's that going to do to the interest rates on things like CDs, right? Certificate of deposits. Right now, you can get some CDs for 5%. That's pretty solid for a pretty safe investment. If this thing keeps going up and then you get some CDs, let's say at 7-8%, I mean, the stock market historically has only been between 8 to 10%. So to get a CD at 8%, that's no risk, that'll be an interesting scenario for the economy, right? I would assume you would get some type of a pullback. Although I thought we would get a pullback with the mortgage rates going up to 7%, but that hasn't occurred because of the inventory. So we're in a very unique economic environment. So either way, I think this is something to look out for, to see what the Fed rate does with these rates. Does it keep jumping? Is that going to mean some deals on the CD market, right? Is it going to be time to throw some money into some certificate of deposits? How is this going to impact housing? Are we going to see rates like they were in the 1980s? Is that the next move? Either way, I've been very vocal about us not seeing rates in the 2, 3, even 4%. I think that for mortgages, I think that if you hear people talking about, oh, we'll be back in 2-3% in a year or two, definitely might want to reconsider that person saying that. Even 4%, you see somebody posting 4%, I would be cautious with whoever's posting 4%. But definitely keep a lookout. Let's see what the Federal Reserve actually does. I'm actually taking a group of students to the Federal Reserve this month, so it's going to be interesting. Stay tuned.